Hello again. Thank you so much for watching. Today we'll be discussing what types of questions we should be asking when we run across a purchase transaction. Now, before we get started, if you please hit that subscribe button and the notification bell, it does help me a lot on those YouTube algorithms. And also, if you haven't checked out our Patreon account and you are a commercial real estate loan broker, or you're looking at getting into the space, a lot of great content here that we don't normally post on YouTube. So check it out. Now, jumping right into it, if you are a commercial mortgage broker and you're running across scenarios, there's going to be all kinds of deals you're going to see. But typically, you're going to see two different types of scenarios: your purchase transaction and your refinance transaction. So when you run across a purchase scenario, you're going to want to ask all the essential questions. Number one, you want to know what the address is. The reason why we want to ask what the address is at the very beginning of the conversation is so we can start doing research on the deal while we're on the phone with a client. It might help us uncover more details, more deeper questions that we're going to want to ask throughout the conversation. But these are just some essential questions you're going to ask, and address is that number one question you want to ask when we're talking about the property. Now, the second question you always want to ask is what property type? What type of property is it? Is it a commercial property? Is it a 1 to 4 investment property? If it is a 1 to 4, is it a duplex, a triplex? These are questions you should be asking. Is it mixed use? So try to figure out what property type it is. This is going to help you hone in what lender is going to be the best fit for the deal, as well as more deeper questions such as how many units and so on. So the next question, obviously, should definitely be your closing date. For every purchase transaction, there's a closing date or an expiration date to the purchase contract. And we want to know whether or not that the borrower you're talking to has entered into a purchase contract or not, and when that closing date is. And the reason why we want to know that is we want to know, how much pressure is there on this deal to get it done? How quickly do I need to close? Now, of course, we want to know what the purchase price is. The purchase price is going to help us determine what kind of loan to value, what kind of loan amount we're going to give the borrower. Now, when we're talking purchase transactions, the loan to value is almost always going to be based on the purchase price or the appraised value, whichever's less. So it's very important to figure out whether or not the borrower is getting a deal or whether or not they're overpaying for a property, because whenever you talk to your lender, they're going to base their LTV on the purchase price or the appraised value, whichever is less. So very important to know what the purchase price is and why they're getting it for that price. Now, if it is a purchase, sometimes you come across those fix and flip deals, and that's a scenario where there's typically going to be a rehab cost involved. If there's rehab costs involved, we want to figure out whether or not the borrower is expecting some sort of rehab money on top of the purchase money that they're requesting. So figure out whether or not there's rehab needed, or if there's no rehab needed, and how much money they're looking for to help them with the rehab of the property if it is a fix and flip style transaction. Now, I mentioned this earlier when we're talking property type. If it ends up being a property with more than 1 unit, we need to find out how many units there are and how many are occupied or how many are vacant, one of the two, so we can understand the occupancy of the property. Occupancy, obviously very important. Now, let's jump away from the property questions, because to every deal, and I've stated this before, to every deal, there's two parts to every transaction. There's the property and there's the borrower. So let's jump on over to the borrower. But these are the questions you always want to ask when you're running into a purchase transaction pertaining to the property. But let's jump over to the borrower side now. So the borrower questions are very simple. It's the same on pretty much every deal you run into. You want to find out what the borrower's FICO score is. This is very important, whether it's a low FICO or a high FICO. This is going to help you know what lender to take it to, as well as what kind of position the borrower is in right now. And it's going to help you determine how many points you're going to charge as well. Just because the lower FICO, the more issues with someone's credit, the more difficult the deal and the more points you should be charging in the end. We want to find out what kind of experience the borrower has. If you have a borrower who comes to you and they're trying to purchase a big commercial real estate, big property, let's say it's like a 10-unit strip mall, but all they own is their primary residence, that's not very much experience with commercial real estate. So when you're taking your deal to lenders, they're going to ask you, well, what kind of experience does this borrower have? Have they ever leased out to multiple tenants? And if the answer is no, then you can expect loan to values to go down or the deal to get more difficult. So you want to figure out what kind of experience the borrower has, and that's going to be detailed in their real estate schedule. So your REO stands for real estate owned, and it should be one of the main things you're always asking for when you're talking to someone who's buying a property. This is going to entail the borrower's experience. And then also, what kind of money down do they have for the deal? You don't want to be talking to borrowers who don't have enough money to put into the deal. They can run you ragged if they're looking for 100% loan to value, or if they're looking for even 90%. That's a very difficult deal to get done. So we need to understand how much money the borrower has to put down for the deal, whether or not it's coming from them or one of their partners, because you might run into certain seasoning issues with lenders that you're working with. So very important to know how much money they got for the deal, where it's coming from, and why. Why do they only have this amount, or just deeper questions along those lines, understanding where the money's coming from. And then finally, you need to understand the borrower's expectations. So if you don't know what the borrower's expecting, it's very hard to sell the loan it's really hard to, really, there's not much you can do if you haven't understood the borrower's expectations. If the borrower is expecting a very low rate, but they've given you all this information and it's just something that they're not going to qualify for, you need to bring them back down to earth and help them understand why the expectations they have are greater than that of what they can actually expect. So very important to understand their expectations. And it's okay if someone's expecting the moon and the stars, that's fine. It's always best to ask for as much as you can as a borrower. However, your responsibility as a real estate loan broker, a commercial mortgage broker, is to help them understand what they actually qualify for, what they can really realistically expect. And this is going to help you close the deal ultimately. So you need to know what kind of terms they are expecting from you before you do any work on the deal, because you don't want to waste any time if they can't come to terms to what they can truly expect. Now, finally, the big question you want to ask every borrower, and you need to ask this on every deal, is why are you talking with me? Ultimately, the deals that we are getting as commercial real estate loan brokers are the deals that have already been denied by the banks. If the borrower still thinks they're bank qualified, but they haven't talked to a bank lender, it might be best to send them to a bank lender and say, hey, I don't do these kinds of deals. I don't think you're qualified, but it is best that you do talk to someone so you can understand why you don't qualify for what you're trying to get. Or if they do qualify for bank financing, you don't want to waste their time. There's no sense in taking a client who's not going to accept the terms that you're going to be able to offer them. So why are they talking to you? What avenues have they taken yet to come to you? You need to understand their story ultimately, and that's going to really help bring out those pain points and give them a reason to actually sign into one of these loans that we have to offer them. Well, I want to thank you so much for watching this video. If you took value from this video, please smash that like button. Helps me a lot. Subscribe, hit the notification bell. And once again, if you are a commercial real estate loan broker or you're looking at starting your own commercial brokerage, you should definitely check out our Patreon. A lot of exclusive content there that you don't normally see on these regular avenues. Thank you so much for watching, and we'll talk to you soon. Thanks. Bye.